anytime a market moves, in this case up, there's a couple things. I just paused it. There's always people on a rally, let's say, because that's the example I'm going to show. On a rally, there are always people looking to pick a top, fade it, and get short. There are always or people who are long looking to cover for a profit, and or people who are short that are looking to stop themselves out, or if they have a stop in there, will get stopped out, whether they do it manually or automatically. So, I mean, those are, if you're not in a position and you're bullish or bearish, you're looking for a place to get long. But generally, after it's rallied like this, the psychology is I missed the long, so let me fade it. And so you got that dynamic. And then you got people who are long, got money in a trade, looking to say, where should I take a profit? Because anytime you got money in a trade, everybody knows this. You want to maximize it. That's not a good thing necessarily, but it is a thing. So you get into this, God forbid if I sell it for a 4-point winner and it turns into a 6-point winner, that's going to be terrible. That's how the mind and where we're weak. So you got to identify that. So, anyways, so you got the bucket of people who are looking to fade and get short, a bucket of people who are long and looking to get out, and then people who are getting squeezed who are short. Okay. So you look at that, and again, the rally in this case, in this example, let's just say it's from this X to right now this X, but this could be to be determined, right? We don't know it's going to stop here and come off, but that's what a lot of people are trying to predict. Even if you're long for profit, you want to sell it at a peak. If you're bearish and looking to get short, you want to sell it at a peak if you're fading it, right? So you get a couple things happen to qualify stack probabilities that the chart's going to look like this. But knowing it's going to look like this before it's down here, because once it's down here and the chart looks like this, it's too late. Fifth grader be able to see and tell you that, right? So here's a couple things probability wise in real time to stack probabilities. All of a sudden, we rally again from this X to this X. We know that. We don't know this at the top yet, but you get a couple big buy pulses, as we call it, which are buy market orders of over 100. That's what this light blue box is. And there's a couple of them. All right. So, bam, you didn't see any of that big buying come in on the way up, and now you start seeing it. Scratch your head. You see this red hollow block, which you guys know is shorts puking or getting stopped out. You also could see that it's significant because it sticks out on the 6-hour puke vertical up here. This is 2 minutes. This is 6 or 8 hours. So it's giving you a little perspective, and therefore, wow, okay. You want to see shorts get, if you're looking to get short or get out of a long, open a short, cover long for profit. You want to see other shorts get squeezed out if you're looking to get short. You don't want the competition. If you're long and looking for a profit and you see a bunch of shorts get squeezed out, that's the shakeout. And oftentimes a probability that the temporary top could be in. All right. So then you see a couple big buy orders that come in. Let's just play it in real time. So bam, bam. Look at it down in here under the microscope. You get shorts puking. That's this hollow red. You get couple, now 3 decent size, at least 100 or more. Now 4 of them buy pulses, buy market orders of 100 or more that have come in, and they're getting rejected. Also, you get other stupid, not going to say stupid, little Johnnies, right? That get long, that's this green. So if that's not enough to say, hey, I'm long, I'm going to cover here. If you're bearish, I'll take a shot here. That's just good order flow reads. Now, that's not simplistic. It is for us because of these tools. It's easier for us because of these tools and knowing what to read and using context. So it's a nice progression. But you got to be kidding me if you're talking to someone who's never went to any kind of decent order flow education or any decent, you know, invest in any decent education. Do you think they're going to understand buy pulse market order rejection, context of a rally, context of people who are bearish looking to fade it? What does it even fade mean? People who are long looking to get out for profit. The understanding of what shorts puking mean. The understanding that if you are short, you don't want competition. Why? Because if you're short and a lot of people are short, everybody's trying to buy it. And if too many people are trying to buy it, price has a tough time going down. And that's what you want to happen if you're short. Right? They ain't gonna comprehend that. Well, what do you mean? If you're short, you want other people long. Why? Because when you're long, you're a seller. And if you're a seller, isn't that what the market's price needs to go down is sellers? So it's like reverse engineering it. And now you're making decisions objectively instead of subjectively with your emotion and what you want. Don't trade what you think, trade what you see.